The world of finance is in a constant state of flux, with new technologies, trends, and opportunities emerging almost daily. Among these, Bitcoin has carved out a unique niche, transforming from an obscure digital currency into a household name and a focal point of investment discussions. The question of whether Bitcoin remains a viable investment opportunity is multifaceted, requiring a deep dive into its history, current market dynamics, regulatory landscape, and the broader economic context. Bitcoin was introduced in 2009 by an anonymous figure or group known as Satoshi Nakamoto. It promised a decentralized currency that could operate without the need for traditional banks or government oversight. Initially, it was met with skepticism and was primarily used by tech enthusiasts and those interested in the potential of blockchain technology. However, as time progressed, Bitcoin began to gain traction. By the end of 2017, it had skyrocketed to nearly $20,000, capturing the attention of mainstream media and investors alike. This meteoric rise was fueled by a combination of speculation, a growing belief in its value as a digital asset, and the increasing adoption of cryptocurrencies. The allure of Bitcoin as an investment opportunity lies in its potential for high returns. Early adopters have seen their investments multiply exponentially, leading many to view Bitcoin as a modern-day gold rush. This potential for significant gains, coupled with the finite supply of Bitcoin, capped at 21 million coins, has led to the perception of Bitcoin as a digital store of value. Supporters argue that as more people and institutions adopt Bitcoin, its scarcity will drive up its price, making it an attractive long-term investment. However, the volatility of Bitcoin cannot be ignored. The price of Bitcoin has experienced dramatic fluctuations, with periods of rapid growth followed by sharp declines. For instance, after reaching its all-time high in late 2017, Bitcoin's price plummeted to around $3,000 by early 2019. Such volatility can be disconcerting for traditional investors accustomed to more stable investment vehicles. While some view these price swings as opportunities for day trading and short-term gains, others see them as a sign of an unstable asset class that may not be suitable for conservative investors. In recent years, Bitcoin has garnered significant attention from institutional investors. Major corporations, hedge funds, and even publicly traded companies have begun to allocate portions of their portfolios to Bitcoin. This shift has lent a degree of legitimacy to Bitcoin as an investment, suggesting that it may be maturing into a more stable asset class. Companies like MicroStrategy and Tesla have publicly announced their Bitcoin holdings, further fueling interest from retail investors. The involvement of institutional players has also led to increased liquidity and market depth, which can help mitigate some of the volatility that has characterized Bitcoin's past. Regulatory developments play a crucial role in the investment landscape for Bitcoin. Governments around the world are grappling with how to approach cryptocurrencies, balancing the need for consumer protection with the desire to foster innovation. In the United States, the regulatory environment has been particularly complex, with various agencies weighing in on how Bitcoin should be classified and regulated. The Securities and Exchange Commission, SEC, has been cautious, often taking a wait-and-see approach, while the Commodity Futures Trading Commission, CFTC, has taken a more proactive stance in overseeing Bitcoin futures trading. The regulatory landscape is evolving, and clarity around Bitcoin's status could have significant implications for its investment potential. A more favorable regulatory environment could encourage greater institutional adoption and pave the way for Bitcoin-based financial products, such as exchange-traded funds, ETFs. Conversely, stringent regulations could stifle growth and lead to increased scrutiny, potentially deterring investors. Another factor to consider is the broader economic context. In times of economic uncertainty, investors often seek safe haven assets to protect their wealth. Traditionally, gold has served this purpose, but Bitcoin is increasingly being viewed as a digital alternative. The COVID-19 pandemic and subsequent economic fallout have led to unprecedented monetary stimulus measures, resulting in concerns about inflation and currency devaluation. Some investors are turning to Bitcoin as a hedge against these risks believing that its limited supply makes it a more reliable store of value in turbulent times. However, the narrative surrounding Bitcoin as a safe haven is still being debated. Critics argue that Bitcoin's volatility undermines its reliability as a hedge against economic instability. While it has shown some correlation with traditional markets during certain periods, it has also exhibited behavior more akin to speculative assets, leading some to question its long-term viability as a store of value. Moreover, the technological and security aspects of Bitcoin cannot be overlooked. The underlying blockchain technology has proven to be resilient, but the exchanges and wallets used to buy, sell, and store Bitcoin have faced security challenges. High-profile hacks and thefts have raised concerns about the safety of holding Bitcoin, prompting some investors to seek more secure storage solutions. Additionally, the environmental impact of Bitcoin mining has come under scrutiny, with concerns about energy consumption and carbon footprints leading to calls for more sustainable practices within the industry. As Bitcoin continues to evolve, new developments are emerging that could influence its investment potential. The rise of decentralized finance, DeFi platforms, which leverage blockchain technology to offer financial services without intermediaries, has created new opportunities for Bitcoin holders. DeFi allows users to lend, borrow, and earn interest on their Bitcoin, potentially enhancing its utility beyond mere speculation. This shift towards integrating Bitcoin into broader financial ecosystems could bolster its status as a legitimate investment asset. Furthermore, the ongoing discussions surrounding central bank digital currencies, CBDCs, could impact the perception of Bitcoin. As governments explore the creation of their digital currencies, the landscape of digital assets could shift dramatically. While CBDCs may offer the benefits of digital currencies, they could also challenge Bitcoin's appeal as a decentralized alternative. The relationship between Bitcoin and CBDCs will be a critical area to watch as both evolve. In assessing whether Bitcoin remains an investment opportunity, it is essential to consider individual risk tolerance and investment goals. For those willing to embrace the volatility and uncertainty that come with Bitcoin, the potential for high returns may outweigh the risks. Conversely, conservative investors seeking stability may find Bitcoin's unpredictable nature too daunting. Diversification is a key principle in investing, and Bitcoin can play a role in a well-rounded portfolio, provided it aligns with an investor's overall strategy. Ultimately, the question of whether Bitcoin is still an investment opportunity does not have a definitive answer. It depends on a myriad of factors, including market conditions, regulatory developments, and individual circumstances. As the landscape continues to evolve, staying informed and adaptable will be crucial for investors navigating the complexities of Bitcoin and the broader cryptocurrency market. In conclusion, Bitcoin's journey from a niche digital currency to a mainstream investment asset has been remarkable. Its potential for high returns, increasing institutional adoption, and evolving regulatory landscape suggest that it may still hold promise as an investment opportunity. However, the volatility, security challenges, and broader economic context must be carefully weighed. As with any investment, conducting thorough research and understanding one's risk tolerance is essential. Whether Bitcoin is viewed as a speculative asset, a digital store of value, or a hedge against economic uncertainty, it remains a topic of fascination and debate in the ever-changing world of finance.